All right, let's take a look at gold real quick. Everything is playing out pretty much as I had anticipated. In my previous video, I think it was, I mentioned that we would probably get some premature profit taking right here as we neared this resistance zone. Traders that had been long from, maybe they got long back here on this double bottom and they've been holding through this whole rally. And they see this resistance zone here. The odds are not great that it's going to slice right through that, at least not on the first attempt. So if you've been long, all the way up here, and you've only got maybe another percent to go to tag this, a lot of traders will just decide that it's not worth risking getting caught in a corrective move. And we're going to be due for one in gold here pretty quick. In order to catch this last 1%. And so you'll just get some profit taking in here, and this very often leads to a little pullback, and then the buyers, more often than not anyway, the buyers will come in and then you'll get a full test of the resistance zone. But a chunk of traders will have taken profits a little early. They forego that last percent or two in order to make sure they don't get caught in the correction as price hits resistance, and that's why you get these little pullbacks that come up a little bit early before you actually tag the resistance. But it looks like now the gold is setting up to try and make a full test of this trend line. This is that handle that we've been looking at from that large cup and handle pattern that's been playing out, and also there's the 200-day moving average. And I think I can almost guarantee the cartel is going to attack gold at this trend line to try and stop the rally. And the daily cycle here, this is the last daily cycle low. This daily cycle really is getting pretty mature. I think today is day 31. The full daily cycles usually last between 35 and 50 days, and you've got to have some time for the move down into the daily cycle low. That would be the point at which RSI comes back down and tags oversold. Now, as I've said before, again, in the advancing phase of an intermediate cycle, RSI can it tends to kind of stay overbought. It can embed in the overbought condition. Momentum can get severely overbought during the advancing phase. So it's not typically a great idea to sell just because price gets overbought. So you could sell right here and then you miss the rally. So different strategies for different phases of an intermediate cycle. In the advancing phase of an intermediate cycle, overbought doesn't mean top all the time. Price can stay overbought. So what I'm really watching now, there is my suggestion to my subscribers has been to take down leverage once gold tags this resistance zone, under the assumption that the cartel is going to attack at that point. And considering that we're 31 days into this daily cycle, there's a pretty decent chance that we're going to get a daily cycle pullback, something that will take this RSI back down to oversold here. But again, in the advancing phase, oversold shouldn't stay oversold very long before the next rally starts. So even though I'm anticipating attack here and probably a move down into a daily cycle low, it would just be a first pullback from this resistance zone. I think gold is going to break through this. So I think any attack by the cartel will only be effective temporarily. It may be enough to force gold into a daily cycle low, push the RSI down to the oversold level, but then I think the buyers will come in again and we'll rally and we're going to break through this resistance. Ultimately, we're going to break through this resistance zone, and I think there's a pretty good chance we're going to test or even go above the August highs during this intermediate cycle. That's why I keep saying I think the real momentum is going to come probably in June and July. So we got to get, whether it comes, from bouncing off this resistance line, or if we get through it and then, everybody, dumb money buys heavily if we break through this resistance zone and then we get our daily cycle low. Um, Either way, we're going to be due for a daily cycle low here. All right, so you want to be aware that is going to come due here pretty soon, and you don't want to panic when that happens. That's going to be your buying opportunity as we move into the what I think will be the momentum phase in June and maybe into July. So the same thing happened in the stock market. So even though this took longer than it probably would have naturally, as I mentioned in my last video, stocks were trying to move down into the daily cycle low here. Fed dumped a bunch of money into the market, prevented that from happening ahead of the FOMC meeting. Then we had the State of the Union. They couldn't allow the market to collapse or correct after that. So, this just was pushed out further than it would have, if the market had been allowed to run naturally. Welcome to our modern managed markets. But even though it stretched a little bit, it still did exactly what it should have done. We're in the advancing phase of an intermediate cycle. Price bounced quickly from this oversold level. As it always does, I get emails from trolls telling me I'm wrong and the market's going to crash, we had 3 down days into a daily cycle low, and I'm pretty sure that was the bottom. We've got a swing today. So, other than stretching the cycle a little bit, everything just progressed more or less as it should, and even pretty mild. 3 days into a daily cycle low, that's really mild. They usually last 5 to 8 days. And this is just what you get when you're printing trillions of dollars. And until we get rid of all these trolls trying to call, a crash or a bull market top every time we have a 3-day correction, then we're just not at the top of a bubble. At the top of a bubble, everybody becomes convinced that there's no risk and that the Fed is going to rescue the market, and the market won't. It's impossible for the market to crash, and 5 or 8 day corrections into cycle lows will be viewed as buying opportunities rather than the start of a crash. And we don't have that mentality yet. We've got to have a melt up phase before that can happen. So, the the trolls wrong again, just like they always are. Just a normal daily cycle low. I'll bet one that was stretched a little longer than it should have naturally, but still just a regular daily cycle low. And pretty sure we've finished that, and we're starting the next leg up. So moving back to gold. So I think a good strategy is to deleverage. If you've been following and you were long for this entire move and you've got some really nice profits here, you might want to deleverage. If you are leveraged, you might want to deleverage when we tag this trend line, just so that we're gonna have a move into a daily cycle low, something that pushes the RSI back down to oversold here. We're going to have that at some point here soon. Whether the cartel succeeds in smashing gold back down at this resistance zone, or whether price breaks through that, and I covered in my premium reports the scenario that would allow this to break through and cause a short squeeze on the commercials. I won't go into that here, but either way, they either succeed right here and they push it down into a daily cycle low, and maybe push this back down to 1850 or 1750, and then we have to make another run at this resistance zone, or we break through it and then maybe have to come back down and test 1800 during a daily cycle low. Either one. Just be aware that we're late in the daily cycle, and we're going to be due for a corrective move here soon. So you might want to consider taking down leveraged trades and just going to an unleveraged position, so that when the daily cycle low does occur, you're not going to take a much larger drawdown. That doesn't mean you should get out of the market altogether. Like I said, there is a scenario where we just slice right through this, and the cartel gets caught in a short squeeze, and then this goes much higher than um, what we're anticipating. That could happen if the banks put on a whole bunch of shorts here trying to take the market down, and then the scenario that I've laid out for subscribers unfolds, and the price slices through that and catches the banks in those shorts. It's going to trigger a short squeeze, and we might even come all the way up, test this level before the daily cycle decline begins. But that's not really what I expect. I think they're gonna throw everything they have at the market to turn gold back down here, and I suspect more than likely they're going to succeed because we're getting pretty late in this daily cycle.